Welcome back from a 3-day weekend. My name's Dez here at Grok Trade. It's Tuesday, January 20th, 2015, and the markets in the day mixed. And I'm reading some commentary here. It says that stocks did dip today, and that's after the IMF reduced its growth forecast for 2015 and 2016. But the outlook also boosted hopes central banks would take more aggressive policy moves to spark economic improvement. Anyway, take a look here what happened today in the markets. You have the S&P 500 up a fraction, Dow break even, Nasdaq though up 0.44%, Russell's down 0.54%, banks down 0.9%, down quite a bit, almost down a full percent gain. So that's relative weakness. However, the VIX though showing bullish activity by dropping 5%, now down below 20. Gold had a good day, up 1.4%. Silver had a good day, up the same. And check this out. Crude oil dives yet again, down 4.64%. US dollar continues to climb. It is on fire. What's interesting here is transportation index, which is a supporter to the Dow, is up nearly 1%. Very good to see that, but of course you would see that with oil prices being so low. Now, here we are looking at the technicals. Technical analysis on the S&P 500 for all you who are new. We look at the S&P 500 as our barometer. Much better than the Dow because the Dow is only comprised of 30 companies. Nasdaq has a 60 to 65% bias towards technology stocks, and the Russells, which brings us our small caps, just doesn't have the liquidity as the S&P 500. S&P 500 is 500 blue chip companies, big companies with a very balanced measure of all the different sectors and indices and different companies that are out there. So here we are. Let's get into some technicals. On a broad level, what we see these big sweeping moves, and then we start to coil and coil and coil. So that coiling really builds a lot of pressure. The thing I want you to focus on is the head and shoulders. I mean, this is just a perfect head and shoulders. Shoulder and head and shoulder. You can see those three humps here. So this is very bearish. Anytime you get three humps with the middle hump, the highest peak, that is bearish, meaning that the market should go lower. Now, that's only confirmed if the neckline gets broken. Now, what is the neckline? Take the head, the highest point, go down either side. Those two low points would give you the neck. So we draw a trend line from this point of the neck, this point of the neck, and we come across. Once that neck is broken, that neckline is broken, so it did break right there. When that happens, bad things should happen. So support broken then becomes resistance. So support once broken then become resistance. That's where we're at right here. I believe there's roughly an 85% chance now that we're going to see within probably as early as tomorrow, going into Wednesday or Thursday, a decisive sell-off right here. I think we're going to see a either tomorrow or Thursday, maybe Friday, but a big red candlestick, and it will start to sell off again. Now, a point that I'm watching for is the cross of this trend line and this trend line right there. And that point puts us at 2030, 2030, 2030. I'm going to say it one more time, 2030. Be watching 2030. And I'm going to actually put 2030 here. That is an area of resistance. If we get a close above that, then I'm looking to unload my hedge, which I do have a hedge on right now, big hedge, looking for bearish activity. So I bought longs in here, nice pop. Things are looking good for the longs, at least the last couple sessions. However, I am now hedged because I think we're going to start heading down. However, if the markets break out and we can see a decisive move to the upside, I'm going to unload my hedge position, my protection, my bearish protection. That will be gone, and I will keep my longs going. However, if it does start to drop here and I see big volume move in on that drop, I'm going to start peeling off my long exposures that I have going. Here's a quick look at the Nasdaq. Nasdaq had this triangle, broke down, it popped up, and right now, man, we are fighting that trend line as we speak. It just looks like we're just going to crash and burn here. We're in a real, I mean, we're on some thin ice right now. It'd be interesting to see how things play out. And gold, remember down here, and I said gold was buy territory. I said buy. Gold now is on fire. Just up and away. And for you guys that's been watching us for a long time, and for you guys who've been just watching us the last few weeks, I think you'll remember me saying that gold was a buy off of this bull flag right there. Bull flag, look for a buy. Kept entering up. I said that was a definite buy. Pop up, buy off this high base. Buy. Did the same thing with silver. Buy, then buy again, and then it's just up and away. And I'm holding some stocks here. Now, I'm personally holding Apple as a disclosure. Apple had a bounce, nice pop today, 2.6% move. However, I'd be looking for a breakout to the upside. You guys, like I said, we're more advanced. You could have bought, on today, especially when it pulled back. That would have been a great buy opportunity. Baba, I also own here, and it is up 3.25%, but I set through a little bit of pain here on Baba, so I'm hoping this thing is going to heal itself. I want to pull in the spiders just to give you a quick look at volume here. You can see on the spiders, we're smashing our head at resistance right now, and we went up on very little volume. However, the volume going into closing out last week was much higher. So we have a brand new website coming out for freeonlinetradingeducation.com. And we have one coming out for Grok Trade. 2 brand new shiny websites. I cannot wait to show these to you. You guys are going to love them. Now, if you go right now to the website, get signed up for the 101 courses. If you do that, that'll put you in our system. I will send you a invite. You will get an invite first via email to the website to see it before anybody else does. All right, there you have it. Take care and safe trading to you all.